Welcome back to Krown's Crypto Cave, getting ready for a very early Tuesday morning over here from a bright and sunny Helsinki, Finland. Ever since 2 a.m., it's absolutely beautiful. No, it's not. Fuck the sun. Anyways, a rather important announcement to start off this morning as, well, maybe not that important. It should be quite obvious for a lot of people out there. But apparently there's been some sort of imposter on both Discord, LinkedIn, and also email as well, impersonating myself, I suppose, with a very similar username, although it's not me, obviously, because I'm never gonna go out and message you out of the blue, unless we have like a pre-existing relationship or something like that. For what it's worth, all of my DMs are actually closed, unless you're on my friends list for Discord to begin with, so I can't even message you, if that's what's going on, and I will never, ever, 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 ever ask you to like trade your account, ask you for trading equity, ask you for money, basically ask you about alts. That's not me. So for the people out there who've been contacted by whoever this sick motherfucker is, well, I apologize about it. I'm trying to do the best possible that I can with getting these people taken off, but it's a very difficult process, unfortunately. And the venues that be like Discord, like LinkedIn, and even Gmail, for example, are not quite helpful with something like that, because it's kind of hard to get rid of something like that. So fair enough. But I do want to make that very, very clear. Anyways, let's talk about some good old price action analysis as we get into this on the Krown Chain application over here, which can be found at app.krownchain.net. And we see literally the same fucking things that we've been seeing for the last month now, pretty much, as Bitcoin continues to contract into oblivion. So today is going to obviously be a big focus on traditional markets, as we have a lot of big things to be aware of there today, and a lot of movement going on as well. And in earnings for a lot of the top stocks like Microsoft and I believe a lot of the tech earnings are today and tomorrow. So big moves likely incoming. And with that said, we can once again put the slight interest on the Bitcoin dominance. It has moved up about 0.25% from yesterday to today. But other than that, we really don't have anything new to be looking at here. And as we've been showing for the last month and a half, there have been signs of the altcoin market in general bifurcating from each other, meaning that we're seeing rotations going on, or maybe not even rotations, but essentially we're seeing some alts, the strong alts, so to speak, really take nice moves and have what looks to be continuation on higher term timeframes, as we've been saying for like the last month and a half now. But there's also a strong majority that are still, in long-term downtrends that haven't done anything and will very unlikely continue to do anything. But so realistically, we have to go through them one by one to get like a real read on them, because I actually do think that could be what's going on right now as this market matures, which is actually a good thing long-term. The strong continue to get stronger. So with that said, let's get into the actual price action charts right here. We'll start it off with NASDAQ once again, because a lot of the earnings for the top names in NASDAQ should very likely drive the major price action coming in from this week. Like I said, today will very likely be a big day. Microsoft is the one to watch, at least in my opinion. And that one actually closed on its highs yesterday, which was quite nice. Anyways, looking at NASDAQ right here. So yesterday I came in, end of last week, I came in saying, hey, we have a potential for a major top being put in here on NAS futures or regular NDX right here. It's the same thing essentially. If one condition is met, if we take out the low side of next week. Obviously that has not happened right here. It's still a potential to happen. However, with the advent of the way that we closed yesterday's daily dildo, it would look like it's at least going to get another try to the upside. And by try to the upside, I mean any sort of a move past the prior high that we had at 11,058 and 50 cents, then I would be looking for, I'd be looking for another leg up overall in the trend to continue to the north side. However, for right now, it does look like on the lower term timeframes, we're a little bit toppy here. And I would be expecting a pullback regardless of whether you're bullish or bearish. Now, I say that, and I'm going into the hourly here looking for any sort of divergence plays. We actually don't even have it, which is kind of funny. Well, I mean, technically you could say that we might have some hidden bearish divergence here, but that would actually not work. We are not in the context of a downtrend here, very obviously. So you know what? I have to say that this is looking a little bit more like continuation. Probably does get another try back down to 10,900, but I would be looking for that area to access support on shorter term time frames, somewhere down around here is where I'd be looking towards so we can make a nice little liquid zone for the short-term time frames and actually flip this guy up, as it's still relevant in that area, but this one's just more relevant to the current price action. So we can start to move this up now. And essentially what this is suggesting is that, yes, we probably do come back down here in Tesla's zone. However, as long as we're above it, the bias technically is to the upside. We are closing on higher highs on a daily, and that is never bearish, So at the end of the day, the trigger for the downside trade has not been met, and for right now, it is not it is not appropriate, at least in my opinion, to be bearish on this, especially as long as we're above 10,850, 10,900-ish region. But from the higher term time frame perspective, the same criteria that we were looking at end of last week needs to take out last week's low at 10,350, and that's quite south of where we are right now. So it's looking, it's looking like it will give another try, but I would pay special attention to earnings today and tomorrow, because that very likely does drive this next move. And if and here's the thing, a lot of people were asking like these very intuitive questions yesterday to me, and I understand where this is coming from, because this is how I used to think as well when I first came in, until my mentor just basically bitch slapped me and said, "Hey, shut the fuck up, kid. What are you doing? This is not how things work." A lot of people were asking, if XYZ posts good earnings, will it go up? Well, no, it doesn't really matter all that much. I mean, it matters, yes, but it's the expectation that goes along with it. So you'll notice that when stocks post an earnings report, they'll have both the expectation of what of what they're kind of like expected to post, and then their actual one. If the expectation is greater and was not met, then usually goes south. If the expectation was met, then usually goes south. If the expectation was exceeded, then perhaps you will get some northwards action. But there's then another two prongs to be aware of. And after the earnings come out, then you're going to get a forwards outlook. That's actually more important to what the next sort of major move is on the higher term timeframes. And there's an expectation that goes along with that one as well. And then on top of that, after they post the earnings, you're typically going to have what's called a conference call, where the higher ups in that company get on and talk and kind of divulge a little bit more information. And depending upon how that talk goes, that can also drive price action. It usually does fit into the forwards outlook narrative. So if you are if you are using TA as your main source of edge in a market like this is the time where I do not trade. When I was a market maker, authorized trader, and in traditional markets, I would not trade the day, sometimes even 2 days before earnings reports comes out for whatever stock I was watching. But I would trade the day after that the earnings report came out, because that usually does have some nice obvious trades to be had. But for what it's worth right now, I'd kind of sit back and let today's earnings kind of govern what this next sort of move is likely going to be. But for right now, do you have to be cautiously bullish? Of course. I mean, closing on higher highs is never fucking bearish. Obviously, are we going to be creating some divergence plays on the daily? Yes, potentially. But right now it's continuation, so it's a possibility, but it's not even set up just yet, so to speak. And I would say more confidently from a daily perspective, as long as NAS is closing daily dildos above 10,750, there's zero bearishness to be had here at all from a daily perspective. We do have a rather big range here, and I imagine that it will get tested rather violently to both sides around closure today, especially. It's still perspective of the higher term timeframes here. So I want to be very, 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 very clear in stating that. And what else do we want to say before I move on to the next set? I actually want to go look directly at Microsoft right here. So Microsoft is very interesting to me, because it is, I believe, one of the major market leaders alongside Apple, and to a lesser extent Tesla kind of gets a lot of play right now as well. Microsoft is not looking as good as NASDAQ, and I do believe that Microsoft does set the tone in the same way that Bitcoin kind of sets the tone for altcoins. If you were to make a relationship between those two, obviously it goes, it typically goes index, then subsector, then index, sector, subsector, then stock, right? Individual stock. Well, this one kind of has like a backwards relationship, because Microsoft's just been so powerful alongside some of the other market leaders like Apple. But here's the thing, Microsoft, the way that it closed last night, or sorry, well, yesterday, whatever the fuck it was called, we do have hidden bearish divergence between this last high put in at 215.5 and where we are right now, and that is a little bit of a sell-off on the end of the day. Not anything too crazy to be aware of, but I would say that this one doesn't look as obviously bullish as Nasdaq. But I'd have to say the same thing here as Nasdaq as well. As long as this closing daily total is above 209.25, there I can't be bearish on something like that. Looks like that. So either a closure below there, and I'd very likely target to move back down to the low side of the range at 204. But realistically, even from a weekly perspective, then we got last week's low, which is 201.39. If we do take that out, doesn't even need to close below there, but just take it out, I'd look for extension back down to 195, 196 region, and then probably a short-term bounce there with potential continuation all the way down to 186, 187 region on the weekly. And it's very likely going to be governed by the earnings, which there's no way to know right now as general public, and I'm basically general public now because I don't trade as a professional anymore. I don't have my I don't believe that my badge is still active. In fact, it should definitely not be active anymore as of like I think it ended in like mid 2019 or late 2019, whatever it was. Anyways, okay, cool. All right, so let's also go check out Apple as well. Another big market leader, and same sort of thing that goes on right here as well. Again, doesn't look as strong as Nasdaq. Actually put in a lower high, or potentially put in a lower high right here. It's not taking out the last high that it put in on 15th of July. But then again, is it rising? Is it rising bottoms? Yes, it is. Is that something that you should respect? Well, I would. Now, as far as this goes, do we have any sort of divergence plays to be aware of? Technically, no, not as it is. So realistically, the range, and this is not going to be all that helpful, but the range that I would be looking at is between 385. Let me see if I have that in. Yeah, I do have it in right now. 385 for a short, or sorry, it's not even 385. 388. For a short-term move to the downside. If that area does get taken out, I would look for a return all the way back down here, very likely, back down towards about 381.5. But even then, I can't get bearish until the weekly takes out last week's low, and that's 375.5. So there's a big range here. If that does happen, I'd look for a quick move down, another $10 to a little bit more than that, like 364, 363 region, and then probably extension to the 10 simple on the weekly at 355 region. That would still be an uptrend on the weekly though. So long term, is this one, would that even be bearish? No, absolutely not. It'd probably be another opportunity, but perspective here on the higher term timeframes that it can, a lot of damage can be done up to price action regardless of how earnings go this week. And the uptrend will still very likely remain on the weekly. So, long term, is it time to get like super bearish? Probably not. Probably not, but there could be some nice downside here depending upon how these go. For the short term, to the upside, I'd still be looking at 396. Any sort of a move back above there, and I'd really be looking at this as an ascending triangle. And technically, yes, you want to see $400 get taken out to the upside, but realistically, your next target after that's going to be what, like 450? Just doing some bad mental math. No, more like 425 region. Let me actually put that in there, right? I want to mark that area off right now, because if this one does post good earnings, I'd actually be looking for a tick up there. Can I even get up there? No, it's too high. I'd be looking at 425. Just very bad mental math, but I do believe that would be around the target region if it does head up there. All right, let's go back to a regular view. Other than that, I don't really see anything that's too obvious here, except for historical volatility percentile, which has been contracting ever since we got into this phase right here. Which right now, this is more or less continuation, reaccumulation phase right here, more than anything. And that would be my main disposition again, as long as we're above, especially 382, and even to a lesser extent. I guess to a greater extent actually, because this one's even higher at 388. So big ranges, of course. Going over and checking out SPY futures, we did get a nice breakout and continuation from there yesterday, going off the 329.25 resistance, did close above, confirming above. And again, this is why I do believe that we're seeing rotations going on in traditional markets right now. This I've been bullish on this one, and I'd continue to be bullish on this one. I mean, technically speaking, I should have a target of about 339, fill this gap coming in from late February of this current year. As it stands, golden cross on the on the daily, and all major moving averages are acting in a rather rather constructive way as higher highs and higher lows get printed on this current run right here. Is there any sort of divergence to be aware of? Nope, not really. I'm sure that some people are going to call this and this. No, it's not, because this is not a confirmed local high just yet. This looks like continuation more than anything else, and I think that this is a lot more visually apparent on the weekly. So realistically, I mean, depending upon how these earnings go, I would probably be looking for it to join the rest of the market, and this one gets rotated now to the upside. Then again, NASDAQ didn't really even get rotated to the downside, funnily enough. But like I said, it's a lot of it's going to go off of earnings, which, that's not my game, and that's really not going to help with TA. The general rule is strong stocks will rally into their earnings and weak stocks will fall into their earnings, but there still remains, and there's a nice interplay in that as well, as it does get priced in a way. There are going to be some insiders trading it, obviously, even though it technically is illegal. But good luck with that. So fair enough. At the end of the day, do have to basically watch what these guys are going to post in the post market hours here. Anyways, what else we want to look at? Maybe Tesla for a second. I still think that Tesla very likely topped out here. But if the rest of the market moves up, then, why not Tesla join with it? I'd still be looking at, where is it? I'd still be looking at this area right here for a short-term high, and very likely come back down and play in this range now between where we are right now and probably back down to 1550. Bullish bias on the short term above where we are at 1650, all the way back up to the prior high at 1750. At that point, I would not look at this as a major top being put in any longer. And remember, the key critical component that I would be using to judge this one as a major high, potentially even a cycle high, is if we take out last week's low, which is 1431. So there's a nice healthy buffer between where we are right now and in that area. But if that area does get taken out, we do have major bearish divergence on the weekly present, and that would very likely force a move back down to 1200, and probably a small bounce there with continuation down to 1100 or 1050-ish region. All look good to me as potential targets to the downside, and then we'll come back and reanalysize it after that. But just like to the upside right now, we're testing around 1650 to the downside just for the short term at 1550. Even breaking below there is not like super problematic. It's again breaking last week's low from the higher term time frame perspective. But your first warning signal would be breaking 1550 back to the downside, and then I look for another drive back down to whatever this area is right here, where all these wicks are getting put in the high 1400s. So fair enough. What else do we want to look at? Maybe Japan. Japan's trading for the day, and Japan is still kind of following, not leading the world market, but more or less following, and looks to me like it's probably going to make a run towards the early June highs. It looks very similar to SPY, but not as strong, so to speak. I think SPY is kind of leading the world markets right now. What else do we want to check out before we move on? How about triple Qs? Triple Qs looks pretty damn good as well. Probably putting in a short-term high right here, and probably does come back down to 263 region. Actually, I don't have any trend lines in here. Nice. All right. Well, I would want to be aware of that right there. Short-term right there. And I do, I do think that we're going to play out a little bit of short-term downside right here below 262.5. I would get short-term bearish again for looking for a move to the high 258 region, 258 region. So I'd be looking towards, and then same thing on this one as we see on just about everything else. All these charts are more or less similar to each other. Taking out last week's low would initiate that same sort of not hidden, but regular bearish divergence, and enforce a move very likely back down to the 245 range at the very least, with potential to extend to 235 region. So a lot of price action is very likely going to be decided this week for the long term. And how does that fit into the Bitcoin narrative when Bitcoin does seem to follow on the macro with traditional markets? Well, it hasn't really been following in the micro, or at least cryptocurrency moon boys would wish it was following on the micro as of recent times, because Bitcoin seems to get punished by any sort of downs in traditional markets, and on the ups in traditional markets it just kind of holds sideways. So let's go into the charts right here, and started off with the same chart that we've been looking at on. Hey, get out of my face, bug! God damn it! It's nasty little bugs in here, because else I'll leave fucking oranges laying around. Hey. Eat only meat. Jesus, man. All right. Anyways, looking at the daily, What do we have? It looks to me like we have set in yet again another lower high, or potentially in the, well, no, it hasn't really been confirmed just yet, but we still have the potential to set in another lower high here at about the 9200-ish region. On a tick basis, I think it's 92.45 on GDEX. Working off that area and following the nice downtrend that we've been working on since late May at 10,200 right here with your high right here, lower high right here, lower high right here, lower high right here. That's 4 lower highs in a row with potential to get a 5th one right here. And if we do get a 5th one right here, it'll be confirmed by taking out 18th of July's low at 91.05 spot 37. Now, does that necessarily suggest that we're going to fully and formally break down finally? No, it doesn't. Still need to see a breakage of the long-term time frame range, which I've been looking at, which we've been looking at for a long time now, which is redundant. But 9,000 to 8950-ish region is a resolution below there. If you are looking at this as, or if you are bearish, then what you're likely looking at here is a descending triangle for the last couple months since, or I guess month and a half since June. Almost a couple of months now. We're almost through July now. Jesus Christ, man, this is just accelerating. But still, need to see a resolution below that area need to see a closure below that area on at the very least, a 12-hour, preferably a daily, before I really start to trade in that direction, which would have a measure move all the way back down to the low 8,000s, upper 7,000s, depending upon, whether you're looking at CMEs or spot price action. Premium on CME is likely responsible for that, but spot would suggest down to like 78, 7,900 to 8,100 region down here if we do meet that resolution, which the resolution for this area is not just a nice horizontal, a very well documented one for the past few months, by the way, but also the Cyan 89 exponential moving average on the daily, as you can see right here, which has actually been catching all of our lows since late June, and also the 236 fib at 89.50 as well. And if we go to the weekly, I'm sure that there's something in there as well. Yeah, actually the 21 is going to be meeting up with that area in the next couple weeks anyways. What's the most compelling one is actually the 2-day 200 simple right here, which has started to flatline out again. So, historically speaking, if we are going to spend some time on the 2-day right here, it should be noted that the 2-day 200 simple does typically get the long-term phases quite well. Now, it's not super accurate, it's not super precise, doesn't need to be, but it does help set in a little bit of a more long-term bias. And as long as Bitcoin's above it, are we generally bullish? Yes, historically speaking, that would be true. Now, as long as whenever Bitcoin's below it, are we generally bearish? Yeah, that's also historically relevant as well. Not the best timer of one, but it does get the long term rather well. And you can see that Bitcoin's very obviously trying to put in a base alongside of it right now. So where is that level coming in around? What do you fucking know? You can have two guesses. Is it 89.50 to 9,000? You're goddamn right. Anyways, I do think that it's also worth mentioning that it is starting to get a flattened slope here. It's still technically maybe slightly positive. I can't really tell myself. I guess it's like fully flat maybe. But anytime that we have gotten a negative slope on it, I mean, that is typically the last drive of a very nasty downwards market. So fair enough. If we did break that area, I'd be looking for, I'd be looking for at least another $1,000 move, $1,000 move to the downside, potentially another $2,000 move to the downside. I do think that this thing could go as low as, upper 6,000s, low 7,000s if Bitcoin does break 89.50 to 9,000 on a higher term time frame. But for right now, still kind of chugging its way along with potentially setting in yet again another lower high on the daily yesterday. So before I get on to that next thought, also it is rather interesting now that the 21 exponential moving average is getting a negative slope and governing the highs, which you can see it slowly but surely kind of grind down price action right here, which I think is even better shown by the daily Bollinger Bands right now as well. And of course, the median band here is a 20 moving average. It's not going to be that different than the 21 exponential moving average, especially when price action has been consolidating in a very tight range for the last few months. I mean, there's not going to be much of a difference at all. But realistically, what I want to focus on here is the fact that we are potentially putting in a lower high again on a rejection of the 20 simple as it starts to get a negative slope, as this tightens up to constrict this contraction over the past 3 months realistically. So what does this essentially imply? It implies that if we do confirm this as a local high, which will be had by especially moving back down below 18th of July's low at 9106 spot 30 on stamp, And whatever I said earlier on GDAX, check your exchange to make sure. At the very least, we'll get another move down to that $8,950, $9,000 base. It's really not that helpful because it's the $100 range there. But always have to be thinking that anytime Bitcoin does come and test one of the long-term time frame ranges, as we print, historical volatility percentile read that is just this low for this long, it becomes incredible. It just becomes more and more probabilistic to break. What this suggests right here is that we are at a complete outlier as far as this contraction phase goes. This is using very generous settings here. I believe I'm running a 365 look back period, and realistically, the only other time that we've been this low for this long was 2018 in October, before this massive droopy drop off from 6,000 to 3,000. There might be another time, maybe back in 2015, 2016, where we got this low for this long. Actually, no, there's actually never been a zero read on the dailies with this setting. Now you'll probably be calling back to about a month ago when I was saying, there were a few other examples. I was using a shorter look back period. I was using a 100 look back period rather than the 365. So it's taking in less data, and that means that it's going to be easier to print those lower numbers. With those settings, but it is rather enlightening to see that even with higher terms or higher settings, that now we really are in kind of uncharted territories in a way. Even from a Trollinger Band perspective, sorry, just wrong chart right there. Even from a Trollinger Band perspective on the daily, we can measure the width here, and as we've been showing, we are now officially, I believe, at the lowest that we've ever seen, except for one other time in Bitcoin's history, maybe two other times. We have one slew right here in April 2016, and then another one right here in January 2013. January 2013 was a major high, I believe, January 13 was a major expansion phase right here, and then the other one, the more recent one in October 2016, was another expansion phase to the upside as well. So it doesn't necessarily imply direction, but it is, it does suggest that we are going to have a major, massive move being born from this current base that Bitcoin is either putting in as a top or as a major market cycle low. And I, just like using the 18th of July's low would very likely confirm this as your next lower high right here and initiate, at least another try to the downside, which can result in resolution. But I still want to see an actual closure. We could also use the high of that dildo as well. It's a multifaceted dildo, in fact, to judge this as, a very sloppy, very ugly, but a workable low right here, and very likely test back up towards 94.50-ish region, which is your last lower high right here. If that area gets taken out to the upside, I would target moves very likely all the way up to $9,900, $10,000, and this is going to look a lot more healthy, and it's going to look a lot more like a reaccumulation phase, just a very sloppy one. And then we can talk about targets towards 11,000 and beyond perhaps. But for right now, when Bitcoin's a lot closer to the downside resolution of this, I just think it's more appropriate to talk about the potential downside targets, as that's what's easier to do: break down $200 to the downside or pump up $800 to the upside. Well, that's for you to decide, I suppose. Maybe a little bit of a rhetorical question as well. I think it's also worth mentioning that on the 2-day, we do have potential jewel hodl or sell signal right here. I think it's a little more obvious on CME still, not for the 2-day, but for the daily. But the thing is that if this hodl your short signal is going to work out from the short that was born on the 9th of June, which didn't get the ultimate high, but did get it. Yeah, it didn't get the ultimate high, but it did get a nice high right there. We would really expect this to start to accelerate past this past this area right here, making a new low below the July 5th low in the next 2 days. I'd say extremely likely if that is going to play out. So the picture that I'm postulating here is that we if this thing is going to resolve to the downside, we very likely see it in the next 2 days. It would imply that if it fails to break down in the next 2 days, by going below this area right here, that we're probably in the process of making something new, and this is no longer to be played, or at least it's played out, which would be I mean, not really much of a play out anyways. I think it told you to sell maybe at like 9,400, 9,500-ish region, somewhere around here. And then we got down to, well, 9,000. So $300, $400 play. Fair enough. Not terrible, but not what you'd expect from a signal like that. So it would be very indicative that something new is about to be constructed if Bitcoin does fail to break down in the next 2-3 days. I'd say it would call into question at the very least. Looking at daily Stokes as well, it's going to have a chance to cross the upside here. This is CMEs, by the way. I believe it's the same thing on spot, but any sort of a closure above 9,300, and yes, it will cross back up to the upside, but that doesn't really do anything for what we're looking at here. Although it does do one thing. It would take out the 19th, or no, it's not the 19th that we're worried about. It's the 18th. It's the 18th high right here. But if we go over to spot, here's what's very interesting. So daily Stokes are still down, and they're going to be getting into the bearish control zone for the first time since a few weeks ago. But what's interesting about that is that we'd once again be getting into the bearish control zone while momentum remains to the downside. And does that give us enough momentum to break the 18th of July's low, marking this as our next lower high at 9,200 versus our past lower high at 9,450? Yes, it would. And that would very likely set us up for another test of the downside support. But does it imply breakage? It doesn't imply breakage. It would very likely give it a good chance though. But I still want to see resolution to that area before I get excited about something like that. A lot of people are asking, can you take premeditated or prearranged trades in this region right here? You can. I mean, this channel is not to like spoon feed people signals and shit like that. That's pretty much what I'm like majorly against, because I don't even think that you can really do it to begin with. I mean, are you going to be up at all hours of the day like me, or at the same hours of the day like me, watching price action and having everything ready to go? Are you going to be trading options? Are you going to be doing futures and whatnot too? Then it's not going to work because we don't have the same tools, and that's a whole nother Pandora's box of confusion. Anyways, but I do want to say that if you put a gun to my head and said trade this Krown, you could equally make a good trade on both sides here. Using a couple different things. If you're bullish, then you have a very obvious risk management point at around 8,950 to 9,000-ish region. Is that risk acceptable to you? That's for you to decide. Not for me. I'm not your fucking dad. But from this price point right here, it would be about what, $150 to $200 of potential risk. For some people, that's going to be okay. For some people, that's not. If you're targeting a move back up to 9,900 or 10,000, is that an acceptable trade? It's a winning formula. Technically, yes. Am I taking that trade myself? No. By the same token, if you want to be bearish here, then you're probably banking on this being your last lower high. And so you have a natural risk management point at about 9,250. Is there a good risk reward there? Again, for you to decide, but that's about what, $70 risk from where we are right now. So you can see that, two traders who I would say have both a really good grasp of what trading is. They could take trades on the opposite side exactly from where we are right now. And assuming that they had, the risk management in place plus their position management in place, both of those are equally valid prospects, and those traders will be successful over time trading like that. I mean, that's basically how I made my living, to a more simpler degree. Now, of course, I use plenty of other tools as well, but at the end of the day, if you can't make it work with just simple horizontals, I don't think that adding in more sophisticated tools is going to make it better for you. I do not understand this disease that a lot of people have with adding like a million fucking indicators to their charts, and you ask them, okay, you have a million indicators on your chart, you can analyze a chart really well and everything, but do you make money? Well, that's why trading and technical analysis are two separate things. To be able to trade, you don't need to know technical analysis. In order to know technical analysis, you don't need to be able to trade, and they are mutually exclusive in the way that I think about it. And there's plenty of people who don't use TA who have some other source of edge who make shit tons of money, and that's all good. But at the end of the day, what's your priority? Is it to make money, or is it to like impress, I don't know, people on the internet with calling shit that you don't even trade yourself on Twitter? Obviously talking to someone very specific now. I don't even know who that'd be, but it does seem like that's, a big reason why a lot of people want to like post their shit, and why I've kind of like stopped doing it myself. I go back and forth with it, but for both legal reasons and just like, I guess morality as well, because I just don't think that for whatever reason, it doesn't feel right. I don't know if I can like put a specific word on it, but it doesn't feel right for what it's worth. It also just feels fucking weird when people ask you like very personal questions like that. It's like, all right, something, you're obviously like searching for something here, sir. Why don't you just fucking say it, huh? Anyways, I'm getting a little bit too off my high horse right now, and let's go see what the medium and lower term timeframes are printing. So looking at the 12-hour, we're not really, I mean, again, it's just riding the 21. I don't really see anything too obvious here. 12-hour Stokes are pointed north, and they will cross back down to the downside below 91.30. So I would look at that as potential earlier resolution for the downside of the short and medium term range to the long-term area at 9,000 or 89.50, probably wherever the 200 simple is on the 12-hour, which is actually 89.50 right now. Quite nice that it does line up rather well there. But basically, if the next 12-hour dildo does close below there, which is closing in 6 hours and 37 minutes, then yes, I would be looking for another drive down there. It would be another preemptive thing suggesting that we will see that we will see this confirmed as another lower high. But is it is it in the cards just yet? No, it's not. Looking at the 10-hour, which I actually think is this oh my god, we're 35 minutes into this. I can give up some secrets now. I believe that the 10-hour is actually acting as the new 12-hour. Must be a new operator in this market, but if the 10-hour closes below 91.50, very likely we will see another move back down to $9,000 low and potential to actually break. Let's go to the 4-hour. What's 4-hour showing? 4 hours trying to put in a higher. 4-hour does look like it's potentially putting in a higher low here. Will cross momentum back up to the upside as long as it rides at 21. So fair enough, you got that. Also governed to the upside by the 200 simple. And we should also denote that on CMEs, we still have the death cross very much present. I don't see, I see it, or at least the way that I play death crosses and golden crosses is that when you have some like this, which is a pretty good setup, and you're still below the 55, it's still viable. Second that we get above the 55, it's not necessarily to say that's not viable, but it certainly loses its grip. Above the 200, it's over. It's not what I'm playing. So fair enough. Anyways, going back over here, we can see that short-term momentum very likely does cross back up to the upside, especially since we are meeting this trend line as well. Something like that. Whoops. Hey, get out of there, you fuck. There we go. Protecting against the edge of the bearish control zone as well. So that is of interest, but a very easy way to be looking at this as well, just because it's right in the 21, as long as it's above there, momentum will remain to the upside. Looking at the 3-hour, same thing as well. 3-hour Stokes cross back up. What do we see? 91.71, which is right where we are right now, essentially. Looking at the 2-hour, 91.50, momentum remains the upside. Below there, obviously turns back onto the downside. So you're noticing that all of these areas are basically coming in at the same price point, which would suggest that as long as Bitcoin's above 91.50, it is short-term, very likely to test the short-term upside, which fair enough, there is some to that. But the second that we close below there is the second that this starts to take on a little bit more of a downwards twist once again. Is there anything else that I want to say to the true TA and trading nerds right now? Now that I got you here where you belong, my friends. It's just me, you, and my microphone, and some girthy green, red, and actually no girth at all, man. These are flaccid as fuck. But basically, it's the same thing that we've been saying for the last couple months. The first major warning signal that Bitcoin is in the process of putting in a higher low here would be any sort of a 4-hour dildo closure above the 200 simple and 200 exponential average on the 4-hour. That's the lowest time frame that I'd go to judge that. Or a 2-hour could probably do the same area as well. It's also going to be in line with the descending trend line that's been governing our last few highs here too. At that same area, 92.50ish region. A closure above there doesn't necessarily imply resolution to the upside. I really want to see 94.50 taken out to the upside, and then yes, I'd very likely talk about a move at the very least to 9,700, but probably 9,900 to 10,000 overall. And then we could talk about upside targets to 11,000. Just like I'm talking about downside targets right now. But still, Bitcoin's just boring the shit out of people right here. So testing everyone's patience, mine included. Let's go check out some of the other market leaders like Mr. Buterol, see what he's doing. Does he have any say in the matter right now? Same sort of potential going on right here as well. Let me put on the 10 simple just to get an idea of what's going on. Taking out yesterday's low, or especially the 18th of July's low, and I'd look for another move down to the 55 at 230. But it's still in an uptrend at that point. By the same token, taking out yesterday's or the day prior's high, and I'll be looking for a move back up to the top side of the range at like like 245, 250-ish region, something like that, and this would look a lot more bullish. I think it's very much worthwhile to check out the 3-day as well. The 3-day looks good. If I have to be bullish on anything, it would be the 3-day chart for Mr. Buteral. Golden Cross is going to be confirmed tomorrow night at 8 p.m. Eastern Time with any sort of a closure here or higher. And this is looking like reaccumulation, if anything else, while momentum oscillator is going to turn back up to the upside. So, this is a very good setup with historical volatility percentile extremely contracted, as well as we have a lot of pent up energy, still, operating off of macro lower highs, but any sort of a move past 250, and I'd look for a very quick extension to this high here at about 285, and then at that point, it has a chance to do something that it hasn't done in a long time, which is create another weekly high. And if it does that, then there's really no reason to be bearish on it, at least for a little bit of time. This is going to probably start to just work its way into the deep 400s, 500s region if that were to happen. But, one thing before the next. And if there is one thing that's really, presenting that nice case, it's Mr. Buteral right now. Litecoin looks like absolute dog shit right here. Stellar giving up a little bit of its luster as well. I do believe that we said it was very likely to come back down to just below 9 cents yesterday, and I believe that that's what we're seeing right here. A little bit of bearish divergence present on the daily, it looks like, as well. Actually, technically no, but I do believe that that's going to play like it anyways. It's probably present on the 12-hour. Ripple looks like another lower high to me, probably coming back down to 18.5. EOS looks like potentially another lower high to me. This one looks mostly like Litecoin. I don't really. They're going to follow whatever the major market does. It seems to me that Mr. Buteral is going to set in the tone. Bitcoin to follow, and then the strong alts will get quite a boost, while the weaker alts will probably just hold on to or try like very anemic rallies. Cardano hitting our downside target from yesterday at 1250. Do you think that this one actually does operate as a head and shoulders right here on the highs, and probably gets extension overall to 1125 region down here, but I would be looking for a bounce in that region. Weekly is looking toppy, and again, a lot of people getting very excited about something like this, but what do we have here? We have high, lower high, and potentially another lower high, which I think is looking rather likely right now. Link came all the way down to our level from yesterday, I think. Yeah, hey, there you go. 79,000 Satoshis hit. Very, very nice. Do think that it plays out a short-term bounce here, maybe even all the way back up to like 85,000 Satoshis. But overall, I think that the party's over here for a little bit of time. That's not to say that it's like done for forever. No. Well, actually, major hidden bullish divergence potentially present on the daily as well. So I'd want to see how this next move goes. I do think that the next short-term move is up, though, back up to 85.50 or 85.500 or whatever the fuck that number is. Fuck that number. It's too big. Can't say it. Gold. What's gold doing? Boolah-ish. I'd still be looking for 1850 to 1900 overall. There's nothing really to change here. It's just up, man. Just up. Maybe some, nah, don't really want to look at Satoshi parents right now. I think that's probably good enough. Holy shit, man, this video is 42 minutes long. Sorry. Maybe euro dollar really quick. It's still going up, man. It looks fine. I wouldn't mind a move back down to like 13.5 cents, but that would very likely be a big opportunity. All right. Okay. Let's go back to Bitcoin. Let's maybe look at some probabilities. Have they shifted around once again? It does look like lower term time frames want to give another stab back up to 90 to 50-ish region. So we'll have a chance here. All right, let's see. This is daily. Same shit as yesterday, basically. Ooh, there is something of interest here, though. We do see that the rings are slightly downwards posturing, if that's anything to go off of. It has not for the last month. Or 2 months, even going back to July. It's not really been helpful. But we are seeing, actually, whoa, this is rather interesting. The below target probability is much higher, or the differential between the above and the below target probability is much higher. It's much more in favor of the downside than it was yesterday. That was unexpected. I would have expected the distance between the two to collapse and maybe even be at parity right now, meaning that the probability is equal to both sides. Actually, that's not what we see, which is very interesting. I can't speak. Same thing for the 12-hour as well, 16.25% versus 29%. With momentum, Bali and Pigs moms, I don't really know how to read that. Looking at the daily, same thing. I mean, it's literally just right there at the zero. It looks like we're going to make a decision. So fair enough. Fair enough. I think that's a good place to close it off. Bitcoin, same shit for the last 3 months. Move above 92.50. That's your first warning signal. Does not get the job done, but would likely extend a move towards 90, 94, 94.50. Above 94.50, things do look actually okay here for extension to at the very least 97, but probably overall 9,900 to 10,000 before a nice short-term consolidation, and then we'll come back and analyze it. Probably talk about some $11,000 targets beyond after that if that were to happen. Whereas to the downside, still the same areas, 89.50 to 9,000. Do we have any sort of hidden bearish driver? No, we don't. It's fair enough. I think that's it for right now. I want to keep an eye on that 91.50ish region for the next 12-hour closure. I think that's a good place to leave off. And until next time, take care.